Hi, welcome to Search for Yields, the weekly newsletter from INR Bonds. I'm Arjun Patsati, and in this newsletter for this week, we talk about strips. We decode strips for you. There are two kinds of strips bonds. One is strip STRIP, and the other is STRPP. In a strip, okay, just giving you a technical full form of strip, which is an STRIP. The full form is separate trading of registered interest and principal of securities. And in a strip, STRPP, it is separately traded redeemable principal parts. These are the technical terms, but I'm going to be very laymanish and very easy to understand for these two. So in a strip, STRIP, only in very simple terms, what this does is that if there is a bond that is issued with coupon payments, that is interest payments every half year or every 6 months or every year, and there is a principal payment at the end of the maturity of the bond, which could be anywhere between 1 year to 30 years or 40 years with government bonds. Then each interest payment is treated as one bond, and the principal and at the end of 40 years, when the principal is paid out on maturity, that is treated as one bond. So just if we go down to the diagram that we have on strip STRIP, then you can see that you have, for example, if a bond has 10 interest payments and one principal payment, then there are 10 different bonds and another bond, which is the principal payment of bond. So there are totally 11 bonds issued. Each bond has this ISIN or its security code and is traded in the market separately. So investors buy and sell the bond where each bond which is stripped as an interest and the principal bond. So when a bond, again giving you, reiterating this, supposing a bond has 10 interest payments and one principal payment. So all the interest payments turn into bonds, 10 bonds of different maturities because interest is paid, say in the first year, second year, third year, fourth year, fifth year, till the 10th year, for example, and the principal paid on the 10th year. So there are 10 different bonds that are traded in the market, and there is the principal also that is traded in the last on the 10th year. So that also is a bond. So there are totally 11 bonds. In that sense, there are only 10 bonds because the last principal, the interest will be paid along with the principal, and that may be treated as one bond or it could be treated as two bonds. That will. Now, coming down to STRPP, separately traded redeemable principal parts. Here, the bond itself is structured in a way where there is a coupon payment, which is similar for all the bonds, supposing the coupon is 6.85%. And the bond is the bond is of 15 years maturity, but the issuer who is issuing the bond pays out the maturity of the bond in 8 equal installments. That is starting from the 6th year. So 6, 7, 8, 9, 10. From the year 6, the year 7, the year 8, 9, etc. For 10 installments, they will pay 10% of the face value. Supposing the face value is 100, then starting from the 6th year, every year rupees 10 is paid out. And each of these principal is a bond by itself. So the issuer issues one bond of 15 years maturity, but pays out the principals in 10 different installments. But then what the market does is to treat each bond as a separate bond, and there you have a 6-year bond, 7-year bond, 8-year bond, 9-year bond, etc., up to 10-year, 15-year bonds. So each bond is a separate bond by itself in the marketplace. So how does it help investors? One is it helps investors to buy bonds to suit their cash flow requirements. So, for example, in a strip, STRIP, given that interest is paid out every half year or every year in different bonds. In G-Secs, it's paid out half year. And investors who want a 6-month bond or a 1-year bond or 1.5-year bond or 2-year bond can choose and pick their bonds. And in a strip STRPP again, investors who want 6-year bond, 7-year bond, 8-year bond, 1-year bond, 10-year bond, the same issuer have the option to buy the bonds they want. So that's the gist of it in terms of strip STRIP and STRPP. So strips STRIP are usually given by the GSEC in the GSEC market. RBI allows bonds to be stripped uh, uh, in GSECs, and strips STRPP is largely in the corporate space. And recent issuances have been Delhi Mumbai Expressway and UPPCL, yeah, the power state government guaranteed paper of the college, the college power company. They are issued again strict STRPP of staggered principal payments. So this is strip and strip, and it's brought to you by INR bonds. And obviously, you can learn a lot from INR bonds. We have a training programs. 1 month training program is a specialized program for relationship managers of financial services companies. We have financial advisors and wealth managers. A 1 month fixed income specialized program, which helps the participants to um, showcase products and create fixed income portfolios for the clients in a very specialized way. It's just a 1 month program. And this 1 month program also has add-on with 11-month refresher as well, if it's optional. And do visit INR Bonds training page, INRBonds.com, to access the training programs. And do not forget to download our app, QuickInvest by INR Bonds, to invest in the best bonds available in the market to suit your different investment needs, as well as if subscribe, if you're not subscribed to your YouTube channel. Thank you very much.